Good afternoon, ladies and gentlemen. My name is Almay Grobler, and I'm one of the chartered accountants that is part of the group that answers your tax query in the form of a tax opinion. We've provided you with an in-depth document of what our tax opinion is, and I'm just basically going to walk you through of what is the tax implication for the year of 2022 for transaction 1. So it is stated that Nedbank Group purchased shares in Aspen Pharmacare on 1 June 2021. This can be deducted according to Section 11A of the Income Tax Act. This is where you can deduct all your general deductions that forms part of carrying on a trade. The value of these 1,000 shares that Nedbank Group acquired will be determined by multiplying the market value of the shares of the purchase of the shares on that date. Now, according to the website I've provided you on page 6 in the transaction discussion, the market value on 1 June 2021 for Aspen Pharmacare was R164.85. Thus, if you take the 1,000 shares times by the market value of 168.85 cents, it will come to a total value of 164,850 that will be incurred as a deduction from the client's taxable income. Thus, you as the client can deduct the 164,850 Rand from your taxable income.
Good day, I'm Kosi Madiza, and I shall be discussing the distributed dividends to shareholders Nedbank made. Nedbank distributed 2,000 of its shares at a value of 600,000. Because these shares were not distributed in cash, the shares shall be accounted for as dividends in specie. These shares must also then be accounted for and recouped at market value. Market value then is priced at 350 Rand 59 cents per share, which in total comes up to 701,180 Rand for the shares. Nedbank is also liable for paying dividends tax, which is levied at a withholding rate of 20%. The amount of which Nedbank will then owe SARS from the market value of the shares shall be 140,236 Rand. With this distribution of shares comes a capital gains consequence. The capital gains consequence is taxed at 80% of the calculation of capital gains. The total capital gains was 101,180 Rand. But then, with the inclusion rate of 80%, it comes to a total amount of 80,944 Rand, which shall be included in the taxable income of Nedbank.
Good day. My name is Arne van Eerden, and I will be taking you through transaction 3 as to where the Nedbank Group received $5,000 in dividend income from one of their trade transactions by UPN Limited, a US startup company. Correctly translated to rands in terms of Section 25D, an amount of 72,744.82 cents will firstly be included in the group's gross income. As UPN is a US-based company, they should be dual listed on the New York Stock Exchange as well as the JSE, but they are not. Neither does Nedbank hold at least 10% of the equity shares. Therefore, the amount received will not be fully exempt, but they still qualify for a ratio exemption in terms of Section 10B, subparagraph 3. As a result, the Nedbank Group will only be taxed at a net amount of 49,960.82 cents relating to the foreign dividends received from UPN.
Good day, I'm Mirel Kwela, and I will be analyzing transaction 4, dealing with the disposal of shares in UPN Limited on the 3rd of January 2022. Equity shares held for more than 3 years will be deemed as capital in nature, according to Section 9C, paragraph 2 of the Income Tax Act. The acquisition amount is given in a foreign currency. We will thus be translating it using the rules given in Section 25D, paragraph 1. The rand value will be determined by multiplying the foreign currency by the spot rate on the date of acquisition and disposal. The spot rate in January 2016, which was the date of acquisition, amounted to 15 rands 87 cents. Thus, the acquisition amount will be calculated as $25,000 multiplied by 15 rand 87 cents, which will give us a rent amount of 396,700. The disposal of the shares gives rise to capital gains consequences, which we will be accounting for according to Section 26A of the Income Tax Act and the 8th Schedule. The base cost, which is the cost at acquisition date, according to paragraph 20, subparagraph 1A, is 396,700. The spot rate on the 3rd of January 2022 was 15 rands 97 cents. Thus, the proceeds, according to paragraph 35, subparagraph 1 of the 8th Schedule, is $25,000 multiplied by 15 rands 97 cents, which will give us a total rent amount of 399,125. Capital gains tax to be included in the taxpayer's taxable income will be as follows: 399,125 minus 396,700 will give us an amount of 2,425, which we will then multiply by 80%, which will give us the capital gains tax to be included as 1,940. Thank you.
Good day, my name is Tato and I'll be taking you through transaction 5 and also summing up everything that has happened from transaction 1 to 5. So essentially what happened is that you bought shares from the Vodacom group, which constitute trading stock. So in that instance, the tax implication that this transaction has, you're going to qualify for Section 11A deduction. This is because the expense was expended in the production of income and for the purposes of trade. So the amount to be deducted is 146,830. This was calculated by taking the market price of the shares by the number of shares that you have bought, which is 1,000. Just to sum up, in conclusion, Nedbank trades in shares which constitute trading stock. So the above transactions gave rise to several tax implications, namely capital gains tax, dividends tax, general deduction formula, and trading stock. So after taking everything into consideration, we computed a taxable income of 241,024 rands and 80 cents. Since Nedbank is a company and not a natural person, we're going to take that amount and multiply it by 28%, which is the applicable tax rate. And that will amount to 67,486 rands and 94 cents. And that will be it. I hope this gave you a nice overview of how to treat the transactions that were presented. And yeah, thank you.